Just turning back to the markets again, we talked about gold, talked about interest rates. What about silver?
Well, silver, let me just put this into context. If you ask yourself what the volatility was of silver using standard deviation for the last 10 years, it's 32%. It's more than double the S&P. It's far more than the NASDAQ. It is the most volatile object on the face of the earth. Also, I do this for a living. If you try to build an algorithm that makes money trading silver, and we tested, and I'm not exaggerating, 218 of them with various trend-following rules, weights, different weights, short-term, intermediate term. The only ones that make money are long-term. Okay, so more than a year with a simple weighting like 1, because they're fundamentally driven. So if you try to do something sophisticated, which is what I attempt to do all the time, and find these little trading rules, you don't make money in 218 different variations. None of them make money over the longer run. So the only one that makes money over the longer run is long term. So what it shows is gold and silver, in this case, are long term, fundamentally driven objects. So you got to think long term. Now, with that said, the volatility in the last couple of weeks has probably risen to about 60 and from 30. Now, it started with margin. Why was margin raised? It was logical, by the way. I agree with the comics. You start off, it doubled in 3 months.
Yeah, the price had risen so much.
So when it was 25, the contracts to trade are $125,000. It goes to 50, now it's $250,000. If your margin is $11,000 at 25, it's got to be higher, over $20,000 at 50. It's normal. The clearing corp does this to protect the integrity of the members who guarantee the clearing corp. So there's nothing wrong about that, but there's a lot of leverage in silver and a lot of traders, and it went up 9, 10 days in a row, so it sells off and you get a correction. Normal corrections, by the way, are measured from the move that takes place to the peak of the new move. So say 25 to 50 is $25. So what you want to measure to know if you're still in an uptrend is the percentage correction of that move. And that would be the normal, you've heard this a million times, you've read it in the books, 1/3 to 2/3 of the previous advance. So we got 2/3.
Well, actually, I would probably go back to $17 or $18 last summer and take that as the base. So if you, let's say 17 to 49, divide that by 2, you get 16, you get 33. You're 50% retracement of the move.
You could look at it that way too.
And 50% retracement is basically a very bullish.
It's not unusual. It's normal.
Yeah.
Okay. You can utilize that measure as well.
Yeah.
But the key is when it went up big, it's now correcting, and it's still in the bull market. Now that's the background of it. The fundamentals of it is that, and again, I've done some research. There's supposedly 65% of the mining of silver is used for industrial purposes. Flat screen TVs, film, you name it, all the various things that silver is used for. So 35% of it is investment. So if you mine 100 ounces of silver, 35 ounces get purchased by people like you and I, and we hold it as money. Now, in the gold's case, it's 90%. 90% of gold mined, and these are, you know these numbers far better than me, but approximately 10% is used for industrial purposes, 90% is saved. Now there's 3.3 trillion ounces of gold, and by the way, correct me because you know this, as I say, better than me. and if you figure that that's of investment, well, there's under 60 million ounces of silver versus 3.3 trillion in gold. So there's very little silver relative to gold. Now, although it's volatile, because it is basically traded aggressively because it's a low-priced object versus gold, and the leverage is immense, so it moves around a lot, but still the fundamentals for silver are no different than gold. They're very positive, and there's just not enough silver in the world for the demand. Now, some comes from scrap and recycling, and India was a seller of silver, for example, for the last 5 years, and now they're a buyer. They're supposed to buy 1,000 kilogram tons of silver. So silver is in a major uptrend. It's basically no different than gold, except that it's used more for industrial purposes. So it's actually it's better than gold in theory.
Yeah, in that sense that it has an economic use besides its use as money, as part of economic calculation. Yeah. But, you know, gold, you can always use it for decoration, too, at the end of the day, as many Indian women do. You know, they save their money by putting it into a necklace.
Gee, I give all my girlfriends silver.
Any words that you'd like to use to wrap up this discussion? You know, this video is going to be viewed all around the world by all types of people, average Joe as well as some sophisticated traders. What would you recommend going forward for you?
Look, the main key thing in making money in the markets is to have a theme, and if that theme is fundamentally driven, you have to have a reason for it, and you're making money from the theme other than 1 week or 2 week small minor corrections, which you know, mostly, by the way, the pause here, TV, they don't use percentages. They use, oh, gold sold off $100 this week. Well, they sold off 4%. You know, they don't use normal percentages. So the key is to have this theme and to stay within the theme. Now, as long as you see governments printing, debasing, borrowing, and keeping interest rates at below zero, real interest rates are below zero. In effect, they're stealing from savers. Well, you've got to be long the precious metals, and you should have other commodities as diversification too.
So basically, tangible assets are the key for going forward from here.
Exactly.
Trader Vic Sperandio, thank you very much. It's been a real pleasure.
Thank you.